Wait before you swipe that credit card one more time. You need to watch this. Because 90% of Americans are making a mistake right now that is costing them thousands of dollars every single year. And the worst part? The banks are praying you never find out. My name is here at American Credit Guide. And in the next few minutes, I am going to show you exactly what that mistake is and how to stop it today. Do not go anywhere. Welcome back to American Credit Guide, the channel where we break down the credit system in plain English so you can stop losing money and start winning with your finances. If you are new here, hit that subscribe button right now because every single week we drop videos that your bank does not want you to see. And if you have been here before, you already know what we do. We cut through the confusion. We expose the tricks. And we give you the real strategies to take control of your credit score, your debt, and your financial future. So smash that like button if you are ready to learn something that is actually going to change your money. And let us get into it. You are losing money every single month and you do not even know it. Not because of inflation, not because of taxes, but because of one simple credit card mistake that 90% of Americans are still making right now in 2026. And the worst part? The credit card companies are counting on you never figuring this out. So stay with me for the next few minutes because what I am about to share with you could literally save you thousands of dollars this year. Let me start with a question. When was the last time you actually read the back of your credit card statement? Not just the minimum payment, not just the balance, the full statement. If your answer is never, or you cannot even remember, then you are already in the danger zone. Because buried in that statement is the exact trap that is draining your wallet every single month. Here is what is really happening. Americans carry an average of over $6,000 in credit card debt. And with interest rates sitting between 20 and 30% right now in 2026, that debt is not staying still. It is growing. Every single day, you carry a balance. The bank is making money off of you, and they have designed the entire system to make sure you keep doing exactly that. So what is the big mistake? It is this. People pay the minimum payment and think they are being responsible. They see that little box on the statement that says minimum payment due and they pay it. They feel good about it. They feel like they handled their finances. But what the credit card company does not put in big, bold letters is this. If you only pay the minimum payment on a $6,000 balance at 22% interest, it will take you over 17 years to pay it off, and you will pay more than $7,000 in interest alone. That means you are paying double for everything you bought. That flat screen TV, that vacation, that Amazon order at 2 in the morning. You are paying for all of it twice. Now here's where it gets even more dangerous. And this is the part that most financial channels will not tell you. It is not just about the minimum payment. The real trap goes deeper. It is about how Americans are using their credit cards in a completely backward way. Most people think of a credit card as extra money, as a backup plan, as a way to buy something today and deal with it later. But that thinking is exactly what the banks want you to have, because later always comes with interest attached. The people who are winning with credit cards in 2026, and there are people winning, are using them in the exact opposite way. They are using credit cards as a tool, not as a loan. They are spending only what they already have in their bank account. They are paying the full balance every single month before the due date, and they are collecting rewards, cashback, and travel points on money they were going to spend anyway. That is the game. That is how you flip the system in your favor. But most Americans are not doing that. Most Americans are charging things they cannot afford, paying the minimum, watching the balance barely move, getting frustrated, and then charging more. It is a cycle. And the credit card companies have built billion-dollar headquarters on top of that cycle. Now, let me talk about something called the utilization trap, because this one is sneaky. Your credit score is heavily influenced by your credit utilization ratio. That is how much of your available credit you are using. The recommendation from every financial expert is to keep it below 30%. But here is what people do not know. To really maximize your credit score and protect your financial future, you want to keep it below 10%. That means if you have a credit card with a $10,000 limit, you should not be carrying more than $1,000 on it at any given time. Most Americans are sitting at 50, 60, even 80% utilization and wondering why their credit score will not move. That high utilization is quietly killing your credit and making every future loan, mortgage, and car payment more expensive for you. And speaking of things that are quietly killing your finances, let us talk about the fees. The annual fees, the foreign transaction fees, the late fees, the cash advance fees. Right now, in 2026, there are incredible credit cards available with zero annual fee, excellent cashback rewards, and solid sign-on bonuses. But millions of Americans are still paying $100, $200, even $500 a year for cards they chose 5 years ago and never reconsidered. Loyalty to a credit card that is not serving you is not a virtue. It is a financial mistake. Here is what I want you to do right now. Seriously. Pause this video if you need to. Go pull up your credit card app or statement. Look at 3 things. First, what is your current APR? If it is above 20% and you are carrying a balance, that needs to be your number one financial priority to fix. Second, what is your utilization on each card? Add up your balances and divide by your total credit limits. If that number is over 30%, you have work to do. Third, are you paying an annual fee? And if you are, pull up your rewards and cash back for the past year. Is that card actually paying you back more than it is charging you? If not, it is time to have a conversation with that bank or switch cards entirely. Now I know some of you watching this are in deep. Maybe you've got multiple cards. Maybe you've got balances on all of them. Maybe you have been dealing with this stress for years. And I want you to hear this clearly. You are not bad with money. You were just never taught how this system actually works. The schools did not teach it. Most parents did not know it either. You were handed a credit card at 18 and told good luck. That is not your fault. But now that you know, you have the power to change it. The 2 fastest strategies to get out of the cycle right now are the avalanche method and the snowball method. The avalanche method is mathematically the most efficient. You list all your credit card debts from highest interest rate to lowest. You pay minimums on everything except the highest interest card. On that one, you throw every extra dollar you can find. Once it is paid off, you roll that payment into the next highest rate card. You keep going until they are all gone. The snowball method is psychologically powerful. You list your debts from smallest balance to largest. You attack the smallest one first, regardless of interest rate. When it is gone, you feel momentum. That momentum keeps you going. Pick the one that fits how your brain works, because the best debt payoff strategy is the one you actually stick with. And here is one more thing that nobody talks about. If you have been making on-time payments for a year or more, and your financial situation has improved even slightly, call your credit card company and ask for a lower interest rate. Just ask. Millions of Americans get rate reductions every year simply by calling and asking. The worst they can say is no, but many times they will work with you because they want to keep your business. That one phone call could lower your interest rate by 2, 3, even 5%. On a $5,000 balance, that is hundreds of dollars a year saved with a single conversation. Look, the credit card companies have teams of psychologists, data scientists, and marketing experts whose entire job is to keep you in debt and paying interest. They are not evil, but they are a business, and their business model depends on you making these mistakes. So the most powerful thing you can do is get educated, get intentional, and stop playing by rules that were written to benefit them. You now know what 90% of Americans do not. You know about the minimum payment trap. You know about utilization. You know about fees. You know about the avalanche and the snowball. You know that one phone call could save you money today. So the only question left is, what are you going to do with that knowledge? If this video helped you, share it with someone who needs to hear it, because the people you care about are probably making these same mistakes right now, and they deserve to know the truth just like you did. See you in the next one. And that right there is how you stop handing your money over to the credit card companies and start keeping it where it belongs, in your own pocket. Now listen, if this video helped you even a little bit, do me a quick favor. Hit that like button right now. It only takes 1 second and it honestly helps this channel more than you know. And if you know someone who needs to hear this, a friend, a family member, anybody carrying credit card debt, share this video with them today. You might just save them thousands of dollars. Subscribe to American Credit Guide if you have not already, because we drop new videos every week on credit scores, debt payoff strategies, and how to make the financial system work for you, not against you. Drop a comment below and tell me, what is your biggest credit card struggle right now? I read every single comment, and I might just make your next video.